Welcome back to Explain the Charts, your source for insightful market analysis. Today is February 9th, 2025, and we are diving deep into the USDJPY market. Recent headlines suggest a significant decline in the USDJPY pair, touching its lowest point since December 13th. Several sources cite heavy selling pressure as the primary driver of this move. News reports highlight Japan's household spending massively beating expectations, further bolstering the case for additional interest rate hikes by the Bank of Japan. Let's analyze the daily chart to confirm the downward trend. The USDJPY pair experienced a notable drop recently, breaching support levels around 150. This decline may be related to the positive news concerning Japan's robust household spending. However, the current price is around 149.274, which is a slight recovery from the recent lows, suggesting that some buying pressure is emerging in the market. There is a potential for further downside, but short-term support might be near 149. Now, let's shift our attention to the 1-hour chart for a more granular view. The 1-hour time frame shows the USDJPY price fluctuating around 149, presenting both bullish and bearish signals, making it crucial to examine support and resistance levels closely. We observe several instances of short-term reversals and consolidation periods within the 149 to 150 range. We can see distinct support levels near 149 and resistance levels near 150. Identifying these crucial turning points allows for better risk management in trading decisions. Observing candlestick patterns like dojis or hammers could indicate potential reversal points. To further refine our analysis, let's focus on a specific period of significant price fluctuations. The 15-minute chart shows considerable volatility. Short-term price fluctuations can create short-term trading opportunities within this time frame. We can look at support and resistance levels on the smaller candles for short-term gains. Key price levels on this chart can be found using indicators such as the Bollinger Bands or the RSI to signal potential entry and exit points. The current market sentiment is somewhat uncertain, with both bullish and bearish arguments. This means traders need to monitor the news closely and make informed decisions based on current events and support and resistance levels. News related to interest rate hikes by the Bank of Japan or economic indicators released by either Japan or the US can impact this pair significantly. Looking ahead, several key price levels need attention. We've identified short-term support around 149 and resistance around 150 on the 1-hour chart. A break above 150 would suggest a shift to a bullish trend, while a drop below 149 could indicate further bearish pressure. The likelihood of a break above 150 is moderate, contingent on positive economic data from Japan and potentially a weakening US dollar. Conversely, a decline below 149 is also plausible, driven by news suggesting sustained monetary tightening in Japan. In the long term, fundamental factors such as economic growth and monetary policies in both countries are crucial considerations. The USDJPY forecast is complex and depends heavily on this information. Significant events impacting the overall economic outlook, such as unexpected economic reports or geopolitical shifts, could influence both the short-term and long-term price direction of the USDJPY pair. In summary, the USDJPY market currently displays a mix of bullish and bearish signals. Short-term traders should monitor the 1-hour and 15-minute charts, focusing on support and resistance levels around 149 and 150. Long-term investors need to assess economic growth and monetary policies in the US and Japan, keeping an eye on upcoming economic data releases and geopolitical events. Remember to always manage your risk appropriately.